Welcome to the latest edition of International Tax News. I'm Doug McHoney, PwC's International Tax Services Global Leader. In this edition, we cover selected tax updates from around the world, including my favorite topic, Pillar 2. If you would like to go in-depth on similar topics, check out the Cross-Border Tax Talks podcast, in video on YouTube or in audio wherever you find your podcasts. Now turning to our current edition. First, Treasury and the IRS on December 4th issued 3 notices providing early guidance on several international tax provisions enacted as part of OB3. Notice 2025-75 interprets the scope of dividends subject to the transition rule under OB3, including dividends that otherwise may be excluded from gross income or benefit from special deductions. Notice 2025-77 provides interim guidance on the implementation of a new rule enacted by OB3 that disallows 10% of foreign tax credits associated with certain PTEP distributions tied to Section 951 Cap A inclusions. Notice 2025-78 interprets OB3's narrowing of what qualifies for FDDEI, particularly affecting sales or dispositions of intellectual property and certain business property. Next, the OECD released updates to the OECD Model Treaty and Commentary. The updates provide guidance related to cross-border remote work in the context of permanent establishments, as well as the taxation of certain income related to natural resource extraction. The updates were approved by the OECD Committee on Fiscal Affairs and the OECD Council and will be reflected in revised, condensed, and full editions of the OECD Model Treaty and Commentary to be released in 2026. The updates consist of changes to the introduction to the OECD Model Treaty, changes to mutual agreement procedures, changes to the commentary on various articles, including the permanent establishment article, and changes to the positions of non-member economies. Finally, the European Commission's second evaluation of the EU Directive on Administrative Cooperation, or DAC, was published on November 19th. The Commission concludes that the DAC is an effective, agile framework that boosts tax transparency and cooperation, purporting to increase revenue collections by approximately €6.8 billion annually. The evaluation calls for simplification, more consistent application of the DAC standards across EU member states, stronger penalties, better data matching, and a digital overhaul of reporting and exchange systems. Thank you for reading PwC's International Tax News. I look forward to speaking with you again on the next edition and on the next episode of the Cross-Border Tax Talks podcast.